What is good, guys? It's Rey-Jay back with another video, and in this one I want to talk about SPY and a couple of other tickers. I'm going to break down what I project is likely going to pan out for the future of the markets, talk about a pullback scenario and how it could end up still playing out, what you should be watching for as time progresses. But before I break anything down, all this information, before I get into any more details, let me just mention a couple of things. Firstly, I am not a financial planner, so take nothing I say as financial advice. And also, if you guys can, please check out the Moomoo link, which is down below and in the description. If you sign up for Moomoo with the link down below and deposit $100 into the account, you are guaranteed up to 5 free stocks. If you deposit $1,000, you're guaranteed up to 15 free stocks, and the offer ends very soon. Anyways, now let's break down what's happened to the markets thus far. So, looking at SPY, I want to call out some very important things that have been going on. I'm going to first clear up this chart completely and start over with how things are looking. So one thing we know is that SPY has been pumping like crazy. Let's actually go back to what happened back since like November of 2023. SPY has been on fire, pumping and pumping and pumping almost nonstop for the most part. We're getting so many green days in a row. But the question is, how will SPY move from here? Are we going to keep pumping forever? Why do I think there could still be a pullback? Now, here's the thing you have to remember. When the market pumps like crazy, it's oftentimes because of market makers and also shorts getting squeezed. But this can't last forever because of what's happening in the economy. And that's the way I kind of view this. I'm not a big bear, guys. I'm not a bear or a bull. I simply just read the chart. Right now, we're on a strong uptrend. SPY could push higher. But like I said in my previous video, I believe that between 495 and 500, around that range or very close to that range is where SPY is going to find a temporary top. I think that we're in for a big surprise, especially for the people who are too bullish. When you look at SPY, the first piece of evidence that's very suspicious is when you look at the daily charts, the more we pump, the lower the RSI has been going because we're forming signals which are suggesting, that we have a bearish divergence. We have a triple bearish divergence on the MACD, and we have a double on the RSI. Now, this doesn't guarantee anything. This has been wrong plenty of times, but the reason why I still think this has merit is because the market is pumped so hard without any sort of pullback. That's the first factor. The second factor is the fact that we've been in this high interest rate environment, and the Fed has signaled that they may not be cutting in March, right? They're not likely going to be doing it. So the issue with this is the fact that with the contraction that's coming to the economy, we could be entering a recessionary environment. And once the economic data comes out and we start to see declarations of this or anything like that, this could incentivize more panic, more fear. Don't forget, we have an election coming up. So these institutions are not going to want to crash the markets or let the market drop really hard during the election or approaching the election. That's what their goal essentially is. If they're going to dump the markets, they're going to try to do it quickly and then recover things, because as we tend to approach 6 months or even 3 months before the markets, we tend to be bullish approaching elections historically. That's what historical data suggests since 1980. That's very important to note. The market has been extremely greedy. When we hit those crazy levels of greed, that's when the market tends to be in a topping process. And I still think we're kind of in that zone. So with the technicals suggesting that the market is topping, with the historical data, and with the fact that we're in basically a potential recessionary environment that's still pending, the economic data is not showing a recession yet, according to the data itself. But with the high interest rates, I think that this is going to cause more contractions, and there could be some kind of catalyst that affects us. What could the catalyst be? I don't truly know exactly what it's going to be specifically. That's why we have to wait. We have CPI in just under 2 weeks, and we also have other pieces of data. There could be something that happens around the world. Who knows what it's going to be? But the market could find a reason to do so, and these market makers know exactly what they're doing. Once everyone turns extremely greedy, that's when they're going to turn things around. And when you look at the current moves within this market, I think there's a very good chance that, we're going to approach some key levels. So here's some levels to be basically watching for. First and foremost, we're going to take a Fibonacci retracement chart. And you will see that if we start down here at the low right about here, and we go to the high, well, it depends on where the high is. Is the high 495? Is it just right here? That could depend on many various different factors. But what's worth noting is that when I go all the way here, you will see that our 0.5 retracement and our 0.382 retracement both happen to be in the 460s area. And don't forget that on the daily time frame, SPY still has a lot of those unfilled gaps. We have loads of unfilled gaps. Okay. We have gaps down here in the 470s. There's another one at 472, right? We have an imbalance down here, a small tiny gap at 468. There's another one down here at 463. We also have this giant one in the 440s, which I don't know if we're going to fill it all the way down there, but I think that the market is due for some kind of correction. And I think it's going to be coming very soon. So I think, and this is what I predict is going to happen, I think that SPY is in a topping process. And I think that something is going to happen that's going to trigger fear in the markets again. Because the market cannot remain, greedy forever. And I think that because it's an election year, we're going to finish the second half of the year very strong. But in preparation for this, remember, Wall Street wants to prepare again. They're going to want good buying opportunities. I think we're going to get one. So I think what's going to happen is something like this. Now, I'm not going to calculate everything precisely, guys. This is just going to be a rough estimate of how it may pan out. But we can see our key fib levels are right here, our 0.5 retracement as well. I think SPY is going to top very soon. And the top is going to be, like I said before, between 495 to 500, somewhere in that range. And then I think there's going to be a big trend reversal. The trend from July, at the end of July up until like October of 2023 was bearish. From November to now, it's been bullish. But the new month is coming. February is historically not a very strong month for the markets. The Fed is going to get in the way. Something is going to trigger something to shift. I think SPY is going to form a topping process, and we're going to slowly make our way back down to these lower levels, especially as we approach March and such. I think there's going to be a big correction coming. I think we might even approach this 0.5 retracement area right here over just the next couple of months. It's going to be very quick. But once SPY finds its bottom, whether it's in the 453 area, whether it's 460, this is when Wall Street's going to start accumulating. This is when everyone's going to turn fearful. They're going to price in a recession super fast. Okay, they pump the market so hard because when they price in the recession, it won't seem as bad. And then right here, we have the election coming up. With the election coming up, they're not going to let the market crash. I said this countless times. I'm saying it again. So I believe the market will make a quick recovery, especially in the second half. And they're just going to pump it again to new all-time highs. I think the market will do something like this. We tend to push and push. September tends to not be the strongest of periods, but they might try to hold it up nicely, especially approaching the election. And going into the election, we're going to likely break to new all-time highs just like this, right? And this is essentially a repeat of this, right? Remember how in July through the end of July through October, right? This is when the market started topping and the market started correcting. We just made a giant V-shaped recovery, basically. Look at what this looked like, right? SPY was up here at 460. We got this big drop back down to 410. This is where Wall Street started buying the dips when everyone was panicking, and we just made a quick V-shaped recovery. Well, the same thing is going to happen over the period of the year, in my opinion. We're going to have one more correction, consolidation, and a big bull run to finish the year to new all-time highs. Never underestimate how high the stock market could go. Never underestimate the level of manipulation. Okay, the election's coming up. It's not going to look good for these politicians if the market is crashing going into the election. So the best strategy, in my opinion, would be you let the market tank. This is where Wall Street's going to be buying the dips, and you get everyone to start selling. You make everyone fearful again. You do this as fast as possible in just the next few months. And then we get a massive bull run recovery. They try to make it seem like everything is okay. They price in the recession quickly and the market rallies very hard. January was very strong for the markets. We had a very strong January. That typically hints in the direction of the market having a strong year. So I think the market will have a very strong year. It's going to catch so many people by surprise. Everyone is expecting the stock market to crash, okay, especially retail. And these Wall Street analysts, what they're going to do is they're going to toy with retail. They're going to correct the market, give us a 5 to 7% correction. Everyone's going to think the big crash is coming, a 10%, a 15% crash is coming. No, It's going to be a quick 5 to 7% crash, a correction if you want to use that word, not really a crash, and they're going to just continue to pump us as we maintain our bull market status. They're going to trick you. It's going to be crazy. And I just want to make it clear that this is still my view. My view has not changed. Okay? The market's going to top soon, but I still hold the same view with this bearish divergences, not to mention historical data that suggests this. The QQQ is going to do the same thing, in my opinion. We're going to see something very similar, in my opinion, with the QQQ. This is due for a big correction. We have a lot of gaps on the triple Q, a lot of them. We're going to make our way back down to the lower 400s, even lower levels. We're due for a big correction, but it's not going to last forever. This thing will make a full recovery after that. So I still hold the same view. My view has not changed. We could push to new highs to 432 or so. Who knows how high it goes. But don't forget our 0.5 retracements at 387. We also have the 0.382 retracement close to 400. It's going to correct as well. Tech is going to get a correction. Wall Street's going to buy the dip, and they're going to rally the markets for the second half of the year like crazy. I believe that's going to happen, and I think that the election year is still going to cause that. So I could go into a lot more detail in another video about this. I just want to make it clear I still hold the same view that the market's in a topping process. I am not a perma bear. I'm not a perma bull. I simply just read the trend, and I believe that this is going to pan out. That's it for this video, though. I just want to make it quick and simple. I want to make it clear that I hold the same view as before. And then looking back at Tesla, is Tesla going to correct more? I think the answer is yes. I think that Tesla has a risk of more downside just temporarily. Okay. But overall, the stock is on a massive uptrend. We have a nice inverse head and shoulders like structure. So, like I said before, it doesn't matter if Tesla's at 180, it doesn't matter if it goes down to 170, 150. It's a big buying opportunity. When this thing was last at 150, it went from 150 up to 300 in just a couple of weeks. Okay. It could run. And the second half of the year, it's going to be very strong for Tesla. First half, it might be a little weak. There could still be more downside coming, sure, but it's okay. It's going to recover. It doesn't matter how low it goes. Let it fall to 180, 150. It does not matter. It is going to run like crazy in the second half of the whole market, and it's going to make a full recovery to new all-time highs within, in my opinion, within a year from now. A year and a half, it's going to make new all-time highs. It's going to be fast. The market is fast. Don't underestimate how quick Wall Street could be. Don't underestimate the Wall Street and the power of these institutions. Tesla is on a big uptrend technically and has a bullish structure. Could it come down short term? Yes. It could still come down to 115, still be bullish overall. My view has not changed. I still have the same view. I'll go into more details about this in a later video, but that's it for this one, guys. My view is still the same. I'm not shifting my view. I'm not flip-flopping. I still have the same view. I'm not giving up on anything. I believe there's going to be a correction coming, but it's going to be temporary. It's going to be quick. I believe the bulls are going to take over by the second half of this year, and it's going to be insanely massive. So you have to get ready for this. I'll talk more about it when the time is right. Just wait some time. You guys will see the shift in the market very soon, in my opinion. All right. Thank you for listening. Have a great day. I think SPY is going to top between 495 to 500. I think that the QQQ could top very close to where we are between 430 and 435. And I think that the market's due for a correction soon. So I'm just warning everyone that that's what I think is going to pan out. Could take many months to play out, but I still hold the same view. And I think that approaching the election, we're going to see a big recovery by the second half of the year. All right. That's it for this one. Have a great day. Remain calm, cool, and collected. I could go into more details in a later video about why I think this. I wanted to make this very quick and simple. So have a great day. Remain calm, cool, and collected. And I'll see you guys very soon in the next one. Thank you and peace out.